Ever wondered what's in that mysterious document called a credit report? It's like a financial report card, but instead of grades, it's filled with numbers, dates, and codes that can either open doors or slam them shut. Today, we're decoding the enigma that is your Transunion credit report. Let's dive in. Think of your credit report as a financial history book. It's a record of how you've handled credit over time. Lenders use it to assess your creditworthiness, basically, how likely you are to pay back a loan. So, if you're planning to buy a house, car, or even get a new credit card, understanding your credit report is crucial. Let's start with the basics. Your credit report is divided into three main sections. Personal information. This is where you'll find your name, address, social security number, and employment history. It's important to check this section for any errors or signs of identity theft. Accounts. This is the meat of the report. It lists all your credit accounts, such as credit cards, loans, and lines of credit. Each account will show the type of account, credit card, mortgage, etc. The creditor's name. Account number, last 4 digits typically shown. Date the account was opened. Current balance. Credit limit, for revolving accounts. Payment history, showing on time, late, or missed payments. Public records, bankruptcies, foreclosures, etc. Collections, unpaid debts. Inquiries, when lenders check your credit. Summary of accounts. This section provides a snapshot of your credit history, including the number of accounts, total balances, and payment history summary. Now, let's talk about those mysterious codes and abbreviations. You'll see terms like 30 days late, 60 days late, and so on. These indicate how late your payments were. The higher the number, the worse it is for your credit score. There are also codes for different types of accounts, like installment loans or revolving credit. Understanding your credit score is equally important. It's a number generated from the information in your credit report. Generally, the higher the score, the better. Factors that affect your credit score include payment history, amounts owed, length of credit history, credit mix, and new credit. So, how can you use this information to improve your credit? Dispute errors. If you find incorrect information on your report, dispute it immediately. Pay bills on time. Consistent on-time payments are crucial for building good credit. Keep balances low. High credit utilization, the amount you owe compared to your credit limit, can hurt your score. Limit new credit. Too many credit inquiries can negatively impact your score. Monitor your report. Check your credit report regularly for signs of identity theft or errors. Remember, your credit report is a snapshot of your financial health. Treating it with care can have a significant impact on your financial future. With that said, thanks for watching, and until next time.